Hello, ladies and gentlemen. Welcome to episode number 1 of Bitcoin Summer. I am coming to you from my hot Midwest office here. I had to turn the AC off, obviously, to do this recording, and it is burning up in here. So I am going to do my Bitcoin news bulletin right here at the front of the episode, and this is going to be a regular feature here on Bitcoin Summer. And the front part of this episode will also be on our YouTube channel. So please follow that as well. Subscribe on your podcast apps and follow us on Twitter. You find all that information in the show notes. So today I wanted to talk about this Jack Mallers announcement, and it's mind-blowing to me as far as game theory plays out with all of these different exchange companies. And now Strike is positioning themselves to be a big player in the exchange field. You know, they're a payment app company, and it's basically laid out like a Cash App. So I'm gonna screen share here, and we are going to pull my picture out there. We are going to talk about his announcement, and which was yesterday, and I'm sure many of you saw this. Jack has been killing it, you know, with the El Salvador news, making Bitcoin legal tender that came out not too long ago. He is just, our hats go off to him because he is doing his part and more for the overall worldwide financial freedom. So what he did yesterday was he announced that there will be a Bitcoin buying tab on his Strike app. And as it stood previously, you could just transfer fiat, regular dollars into the app, and then it ran across the Lightning rails. And so the delivery system was the Bitcoin. But now you can buy and hold Bitcoin on his app, on the Strike app. He has effectively now made this the cheapest app, the cheapest place to buy Bitcoin. And I'm not exaggerating. I did the math for you guys, and I have it here for you to check out, because I think it's super interesting. So what they're really doing here is positioning themselves, as I said, to be, you know, kind of a pure Cash App rival. You can buy Bitcoin through Cash App. They allow you to remove it from their app, which is not super common right now, but I think, like I said, game theory is going to be playing out in other apps. PayPal already announced that you'll be able to remove, I don't know if they've done it yet, but they announced that you'll be able to remove it from their app soon. Not only is it positioning itself to be a Cash App rival, but it's also, in my opinion, going to be a major Coinbase killer. I mean, it's undeniable the amount of damage this is going to do to Coinbase. And quickly before we go into the exchange fees on Coinbase, I just wanted to show you yesterday's when this announcement came out. Just a slight drop. It wasn't anything crazy, but this being an investment podcast, I would not, and maybe would not ever be interested in purchasing Coinbase and holding that. Well, number one, I'm a major Bitcoin holder right now, and it's my main allocation. And by main, I mean just about everything. And there's a bunch of different reasons why I wouldn't hold Coinbase, but definitely with this news, I wouldn't be purchasing right now. I mean, this price would have to be a lot lower, and then it might get interesting if it would, if it dropped 50%, I might take a look at it. But I just think there's a lot of shitcoinery going on with the Coinbase app, and that's not my style, and I just think they're getting a little too loosey-goosey with that whole thing. And it seems like they promote that instead of promoting something like Bitcoin. And, to me, Strike app is not going to be, it's not a pure killer of Coinbase, but what it's going to do is dramatically reduce the market share of Bitcoin, because obviously you can't buy other, and Jack Mallers wouldn't ever allow purchasing of any other shitcoins on Strike. So they're not going to be taking away that business. So people who still want to buy other cryptocurrency, they can still use Coinbase, but as everyone might be aware of, Bitcoin is the big dog. And if if your sales are whatever it is right now, 50% Bitcoin, that's huge. I think Bitcoin dominance is right around that 50%. So if your revenue coming in is 50% Bitcoin and that starts getting chiseled away, good luck to you. Good luck. So what I did earlier was, let's see if I can pull this up. Where did I put that? Okay, here it is. So what I did earlier was I did some math for you guys so you wouldn't have to do it. It's a holiday weekend and I think you guys should all relax. So what I did here was, Jack was kind of doing these calculations with $100, but I wanted to show people if you were going to be doing some dollar cost averaging into Bitcoin, he was saying that it was right around 3% by his calculations. But if you're doing a $10 purchase, you're going to be paying a spread. So that means that if the Bitcoin price is listed at 30,000, you will actually be purchasing it at 30,150. And so that spread will cost you 165 sats. That's just a fraction of Bitcoins. We'll get into that later. This is a fraction of a Bitcoin, and we'll get into sats. That's the standard. And as Bitcoin's price moves higher and higher, we'll have to start thinking in sats, because people aren't going to start talking about 0.000002 Bitcoin. That's how much it costs to get this cup of coffee. I mean, it's going to be too tough for the general public to wrap their heads around. So sats is the standard. So that's equivalent to, at this price, if we were purchasing at this price, that's equivalent to 5 cents. So you have the 99-cent base rate for up to $10 purchase, and that's around 10% of your purchase. So if you're making regular contributions to Bitcoin for an investment, you're literally paying 10% if you're doing small amounts. And as you get to higher amounts, the percentage goes down. So, at $25, it's 6%. So Jack was right. I mean, it's around 3%, but even he was sugarcoating it a little bit. He, in this letter, said it was 2.99%, and an actual purchase, $100 purchase on Coinbase, is 3.49% for a $100 purchase of Bitcoin. That is just insane, and I'll show you why. Let's see here. Where is it? Bear with me a second. So here's he says nearly at 3%, so it's almost 3.5%. Venmo and Cash App are still right around 2%. That seems pretty reasonable to me, and I've made purchases on Cash App, and actually it was my first purchase because I already had Cash App, and this was 2018, and it was, it was right there, and I was like, what is this? I knew what Bitcoin was, but how is this on my Cash App? Like, and I was really more into the stock realm at that point. And that's how I kind of stumbled across being able to know how to purchase Bitcoin, because sometimes it's convoluted. It's getting easier and easier as we're finding out. But I mean, he lists all of these apps, their vendor charges and for their merchants. And what Jack is doing is trying to build that infrastructure, especially in El Salvador right now. And then I think the UK next, or is it the EU? He might be doing all of Europe. It might be the EU. He's absolutely right. These fees are crazy, and they're making bank off of it. And he's going to be able to chop into this. And he's going to be working with these vendors and getting them to switch to the Bitcoin network, and that runs on Lightning, or that Lightning runs on the Bitcoin network layer 2. But I mean, this is I'm getting to the point here. 0.3% is what the charge is going to be on Strike. That's 30 cents for $100 purchase. And the even crazier part is that he says it's going to go even lower than that, to 0.1%. I mean, Jack's a wild man. Yeah, I mean, I needed to touch on that because it's just, I just think this is the next big thing in not only Bitcoin, but the next big thing in payments. So we're going to keep a close eye on that here for sure on Bitcoin Summer. And I made a mistake yesterday. I didn't get on the waiting list. So I suggest everyone take a peek in the show notes and grab my referral and get on the wait list there. And yeah, you'll see all the information down there. But I didn't get on yesterday. So I can't buy it yet, but I got a couple dollars burning a hole in my pocket, so we'll check that out. So let's move on to the difficulty adjustment, which is happening at some point tonight, and I'm recording this on Friday, July 2nd, and the difficulty adjustment happens on the 689,472nd block of Bitcoin. And let's check out my mempool here. Fees kind of dropped down a little bit. Okay, so so these are blocks that have been confirmed over here on the right. These are blocks waiting to be confirmed, and this is what's called the mempool, and that is the area that transactions wait to be confirmed. And so every transaction coming in, if it gets congested, the prices go up. It's one of the only remaining free and fair markets that exist is the Bitcoin network. So what we're looking at here is, you may have heard that China has kicked out all of their miners, and There's a couple theories of why they did this. A lot of people, especially in the Bitcoin world, absolutely think this is a multi-decade, multi-trillions of dollars mistake. And reason being is they had such a large market share of the mining. And, they kind of control production. It's a communist country, so they kind of control the production in the country. So basically, that Bitcoin essentially was theirs. I mean, if you really think about it. So what happened is they kicked everyone out. We lost a ton of the hash rate, which is we don't need to get overcomplicated right now, but it's kind of an easy way of saying it's the strength of the Bitcoin network, and it's the the combined forces of all of the miners that plummeted to a crazy degree, and it became it took longer and longer for this mempool to get cleared out, and therefore, miners are having a harder time making their money. So what happens is just about every 2 weeks, it's exactly every 2016 blocks that get mined. So that's this number up here. Every 2016, we get what's called a difficulty adjustment. And you can see that figure here. So what happens is the difficulty adjustment either gets adjusted up or adjusted down. And this next one tonight is going to be a difficulty adjustment downwards. Again, without getting too complicated with mining and the intricacies of mining, because it gets pretty intricate. We'll discuss that later on down the road. What happens is when the difficulty adjustment gets adjusted downwards, the miners have a much higher success rate of mining these blocks. So what does that mean? So that means that this mempool is going to clear out quicker because they can confirm their transactions quite a bit quicker. And also, this one, because of such a large hash rate drop, it's going to be the largest difficulty adjustment of all time that Bitcoin has ever seen, which will mean we will have probably a pretty immediate clearing of the mempool, or at least it's going to drop down. You'll see maybe 1 or 2 blocks out here. It's going to start making this system go by quick. I mean, this number's dropping already, but we're looking for 689, 472. So it's 22 blocks here. We're coming up on it. This is exciting stuff, folks. So what happens is, obviously, you increase the odds of success for the miners. So when this difficulty adjustment goes downwards, the hash rate will automatically rise. The mempool will clean up, like I said, and it will lead to an increase in hash rate. And a lot of people wonder, if it leads to an increase of the hash rate, does that affect the price? According to, I follow a guy named Willy Woo. He's really popular out in the world. Those of you who are Bitcoiners probably know who he is. He's an on-chain analyst, and he studies, instead of a traditional technical analyst, he studies the chain, the blockchain, and derives his data from what has happened through the entire history of Bitcoin. And I think it's his insights are quite amazing. But the way he puts it is the price orbits the hash rate. Or they orbit each other. They affect each other, and they kind of swirl around with each other. So I pulled down a comparison chart. And if you if you take a look, it's not. So the way that I've interpreted it is, it's kind of a steady rise because of the increasingly growing Bitcoin network. So this hash rate is going to rise. That creates more incentives for the miners to work harder and harder because they're getting rewarded more and more. And as the price goes up, they continue to work harder and harder. But as you can see, you can have huge price spikes without the hash rate spiking. It kind of runs in a channel in a way. And what I have in the green here, you might, hopefully you can see clearly, that is the mining difficulty. So what's going on here is this is kind of when, this was the peak of the local peak of this market. I don't think the peak of this year is even close to being found yet. But that's just my opinion. So right around the peak, that's when China started mentioning, we're gonna, we're not using enough sustainable goods to mine the Bitcoin, so we're gonna start dumping out these Bitcoin miners of our country. And this is what happened to the hash rate immediately. I mean, it just plummeted. That's when all this started, but this huge spike down right here. They had like a coal, I think it was like a coal plant or a coal mine blow up, or some sort of an accident, and apparently it took a whole province of Bitcoin mining down. So what was the level of fear, uncertainty, and doubt, the FUD that was going on during this time, was there's too much concentration of Bitcoin mining in China. And, Bitcoiners pride themselves on the Bitcoin network being decentralized. So yeah, it seemed like a good argument on the outskirts and even beyond the Bitcoin world. People were talking about how this is a terrible thing, and like this is why you shouldn't invest in Bitcoin. And it's like, you have a good point. I didn't agree with them, but there's a point there. Now, what happens? I mean, besides a self-obsessed, attention-seeking billionaire, pumping shit coins, what happens to this market? Coming down, and then we get, as it's a weak market, then China really goes hard, and they do a hard pull of the Bitcoin mining out of their country. And so in my mind, that dissolves the entire argument of, China's has too much hash power, and they basically could take down the Bitcoin network. And now, to me, that FUD is dead. And yet the price continues to fall when it should be going up, in my mind. And there's all this other news with El Salvador, and there's other countries, Tonga, and other countries that are kind of feeling around a little bit. But this is the lowest hash level that it's been, I think, since 2019. Yeah, right around here in 2019. Like 2 years ago, basically exactly 2 years ago was the last time that it was down this low, and it's recovered just a bit, but not much. The thought is that tonight, with the difficulty adjustment, we'll see it come back up. But I pulled up this mining difficulty because to me that looks like the hash rate. It's not a perfect correlation. Obviously, you have these big drops have much of a rise beyond the difficulty. That's kind of an interesting thing. But you do have these dips, but you always seem to find a way to come back up into this difficulty level. And this is very this is the most, I think, important part of this chart right here is look how far down that is. I mean, and look where the difficulty adjustment is. Now, this is going to be the biggest difficulty adjustment ever in the history of Bitcoin. It can only go down 75%, and it can only go up 300%. Now, this is... It's going to be going, there's some estimates. It's going to be going down. The difficulty is going to be going down around 30%. It might even top out. It might even bust beyond 30%, but we'll definitely have to see. I just, this to me, all of this is just, all of this is screaming just a local bottom. And the thought is that the hash rate's going to come climbing back up too. But, we might not see strength in that area for a while. It's going to take a long time for these Chinese miners to relocate, to reset up. It's an expensive process. They had to obviously sell, a lot of their Bitcoin to, I heard a lot of them got called out. They got margin called from their loans at the Chinese banks. So they borrowed money, and then the banks were like, you have to pay us. So they had to sell a lot of Bitcoin. They were holding on to a ton of it, and they were just borrowing for their expenses because they imagined that this price was going to go a lot higher than 60,000. So they weren't selling at 60,000 until they were forced to. And that's a big part of what happened to this price in the short term. But as anyone knows in the Bitcoin world, it's just an amazing time to buy. It's ridiculously cheap right now, in my opinion. So it's going to take a while for the Chinese miners to relocate. Some are saying, 6 months, a year and a half, possibly. And that doesn't necessarily mean the price is going to stay here for that long. It just means we might not see this hash rate bounce back as quickly as we would like for strength of the network. But this is a critical fulcrum for Bitcoin. But I think hash rate has to rise from here. I just think it's hit just too low of a level. So that's it for difficulty adjustment, and we will do a much bigger, longer episode of to get into the nitty gritty details. Maybe I did a good job at getting a little too much in depth there for you guys. So maybe we won't need to. But I just again wanted to welcome everyone to the show. That was the Bitcoin news brief. That will be on every episode, and you can check that out on our YouTube channel as well. So July 4th is the launch date. We're going to be releasing 3 episodes. This is going to be one of them on July 4th. 3 full episodes. You can binge all you want. You can, whether you're going to be nursing your firecracker stub or whether you're going to be nursing your hangover the next day on Monday, you can binge these first 3 episodes. The first episode is going to be the pilot, which is my friend Jay and I talking about the origin story of Bitcoin Summer and why I turned all of my focus on this project and wanting to get my voice out there and do my part to expand the knowledge base of Bitcoin. Then we're going to be releasing a huge mega 4-parter of the intro to Bitcoin. It was so big we split it up into 4 parts. So 2 of the parts of the intro to Bitcoin episode will be released on July 4th. You're listening to one of them right now. And the last 2 parts will be released on the 8th. So that'll be the show schedule pattern, which will be Monday, Thursday release dates. So subscribe wherever you listen to your podcasts so you don't miss an episode. And subscribe to our YouTube page, and you can find all of that information in the show notes. And be on the lookout for these Bitcoin news briefs as well. I'll be doing 2 of these a week. And we'll have the video up on the YouTube page as quickly as possible. And I'm probably going to do an early release of this one just to tease the release on this Sunday. Let's just have fun with it, guys, and let's get right into Intro to Bitcoin.